Welcome back to Iraqi Dinar Alert, your go-to source for the latest insights on the Iraqi dinar. Today, we're diving deep into a question many of you have asked. How exactly do investors watch the Iraqi dinar? It's a currency that has captivated people worldwide, especially those interested in emerging markets and currency speculation. While it isn't traded like the US dollar or the euro, the dinar has built a reputation based on rumors and hopes of a potential revaluation tied to Iraq's economic future. To really understand how investors monitor the dinar, we need to look at the economic indicators, geopolitical factors, and market behaviors that shape its journey. First, let's talk about the dinar's value. Unlike currencies from highly diversified economies, the Iraqi dinar's fate is overwhelmingly tied to one thing: oil. Iraq sits on some of the largest oil reserves on the planet. This means that when oil prices go up or down, the dinar's purchasing power can be directly affected. Investors are constantly watching Iraq's oil production numbers, its export levels, and the revenue reports coming from the Ministry of Oil. A steady increase in oil exports often signals a more stable economy, which in turn boosts investor confidence in the dinar. But it's not just about oil. The Central Bank of Iraq is a major player here. Its monetary policies, things like interest rates, foreign exchange reserves, and how the dinar is pegged to other currencies, are critical. These policies can determine whether the dinar stays stable or becomes volatile. That's why serious investors are always on the lookout for announcements and reports from the central bank. They're trying to gauge the long-term direction of the currency, whether it's likely to appreciate or depreciate over time. Now, let's shift gears to the political side of things, because investing in the Iraqi dinar isn't just an economic game. It's deeply connected to politics. Iraq's political history has been marked by instability, conflict, and corruption, all of which weigh heavily on investor sentiment. Any sign of political tension, whether it's internal government disputes, public protests, or instability in the wider region, can dramatically increase the perceived risk. Investors who are serious about the dinar don't just read economic reports. They track news and intelligence from Iraq and neighboring Middle Eastern countries. They need to understand how geopolitical shifts could impact the currency. Furthermore, Iraq's relationships with major world powers like the United States and its neighbors are crucial. Things like international sanctions, new trade agreements, or foreign aid can all have a direct or indirect effect on Iraq's financial health and, by extension, the dinar's future value. Experienced investors know they have to combine economic data with a thorough political risk assessment to get a complete picture. So, where do people actually trade the dinar? You won't find it on mainstream foreign exchange platforms. Instead, there are specialized brokers and online marketplaces where investors can buy and sell physical dinar notes. Because it's not widely traded, its price isn't as transparent or volatile as major currencies. This is what we call an illiquid market. Because of this, investors often rely on price tracking websites, online forums, and dedicated communities that discuss dinar trading trends. These platforms offer a window into demand, resale prices, and the speculative chatter that surrounds the currency. Even though the trading volume is relatively low, many investors treat the dinar as a long-term hold, betting on that potential revaluation. Monitoring the market sentiment is key. A sudden spike in demand, often fueled by rumors about government policy changes, can influence the dinar's perceived value, even if the official exchange rate hasn't budged. This brings us to the ultimate question: what are the indicators of a potential revaluation? This idea of the dinar's value suddenly soaring against the US dollar is what has fueled so much of the interest. While there's no official timeline, and we must stress that investors are watching for several key signals, first is economic recovery. Sustained improvements in Iraq's GDP, infrastructure development, and a positive trade balance are all signs of a strengthening economy. Second is foreign investment. When large-scale foreign companies start investing heavily in Iraq, especially in sectors like oil and construction, it shows growing confidence in the country's future. Third, and this is a big one, is monetary policy reform. Any announcements from the central bank about stabilizing the currency, lifting exchange restrictions, or adjusting its peg to the US dollar are watched very, very closely. And finally, government initiatives. Efforts to fight corruption, improve transparency, and privatize state-owned industries can all spur economic growth and make the dinar more attractive. Investors piece these indicators together with their own analysis to decide when it might be the right time to get in or out of the market. The dinar investment community is incredibly active online. You'll find forums, social media groups, and newsletters all dedicated to monitoring the latest news and trends. In these spaces, investors share their analysis, news updates, and personal experiences, but it's a double-edged sword. While some of this information is valuable, a lot of it can be misleading or based purely on speculation. That's why doing your own careful research is absolutely essential. Most professional financial analysts tend to advise against purely speculative investments like the dinar, pointing to the high risk and low liquidity. However, for a specific group of niche investors, the dinar represents a unique alternative asset that could, in theory, yield huge returns if a revaluation ever happens. To manage the risk, smart investors diversify their portfolios, balancing their dinar holdings with more stable assets like gold, real estate, or major world currencies. Finally, we can't ignore the psychological element. The dream of a sudden, life-changing revaluation creates a powerful sense of urgency and FOMO, or the fear of missing out. This speculative excitement can drive demand for physical dinar notes, even when the official exchange rate remains unchanged for long periods. Understanding this human element is just as important as tracking data. The most savvy dinar watchers are those who can balance their optimism with a healthy dose of realism. They acknowledge the potential upside, but also understand that the currency could remain stable for many more years. So, to wrap it all up, watching the Iraqi dinar is a multifaceted endeavor. It requires a combination of economic analysis, political monitoring, market observation, and an awareness of investor psychology. Investors track everything from oil revenues and government policies to geopolitical events and market sentiment to weigh the potential risks and rewards. While the dinar offers a unique speculative opportunity, it comes with significant risks tied to Iraq's complex economic and political landscape. For anyone choosing to venture into this space, staying informed through credible sources, expert analysis, and continuous monitoring is the most important rule of the game. Thank you for joining us on Iraqi Dinar Alert. We hope this gives you a clearer picture of how this fascinating currency is viewed by investors. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. We'll see you in the next video.